Hello, Lukman. Let's go
Hello.
into po.
Let's go.
Okay.
Wow, can I see your watch?
Sure. If you see, you can see a blood pressure, heart rate, weather, and stress.
Oh, good.
All of function for this. Wow, it was so beautiful.
Oh, thank you.
Where did you buy it?
Oh, you can get it at Nova Global Corporation website where you can get it at RM40 ringgit.
Oh.
But usually you can also buy at Shopee where you can get less than 2 ringgit. So it has a lot of function.
I see. What color they have?
They have a black and pink,
Oh.
but also we have a lot of color that you can get.
I see. I think I will buy it later. Thank you, suggested for me.
Okay.
Good morning, everyone. Welcome to Nova Global Corporation Finance Team meeting. So today we will launch our new product for Nova Global Corporations, which is Smart Fitness Watch. So as you can see in front of you guys, have our sample product where it is consists a lot of functions for especially for sport users. So therefore today we will evaluate the cash flow of our new Smart Fitness Watch product launch, whereby we ensure how accurate our financial planning and also the financial decision, and also our team department, which is finance, will analyze how much the cash flow we will using three approaches, which is first one is a top down approach, and then the second one is bottom up approach, and lastly also the tax shield approach. So therefore, without further ado, after discussing all approaches, we will determine which approach is more suitable for our project and the product, basically for our product launch. So first, I would like to invite our revenue analyst, Ms. Zohaira, to explain the top-down approach. So you can please.
Thank you, Finance Manager. First of all, let me introduce myself. My name is Zuhaira Safia Binti Zaini. I am a revenue analyst. So basically, I will explain about the top-down approach. So the top-down approach start with the estimated sales revenue, then deduct all expected expenses such as material cost, labor cost, and overhead cost. Based on our market research and customer demand analysis, the estimate sales revenue is 500,000. Therefore, the expected cost consists of 100,000 of material cost, which is contain 43% of the cost, and 5,100 ringgit for labor cost, and 8,100 ringgit for overhead cost. So the total of these costs is 230 ringgit. 230,000 ringgit. So uh, we have to find the operating profit, which is we have to uh, we have to calculate revenue minus the all the total cost. So the total will be 270 ringgit, 200,070 ringgit, and it shows a positive operating profit. So this is the summary of our top-down approach result, which is the first one is estimated revenue, which is 500,000 ringgit, and the second one is total cost, 230,000 ringgit, and the lastly is operating profit is 270,000 ringgit. So this indicates that the project has a strong profit potential. The main advantage of the top-down approach is that it provides a quick overview of profitability. However, it may overlook detailed cost information and depends on the accuracy of revenue forecast. Now, so I think that's all from our side to explain the top-down approach. So yeah, that's all. Thank you.
Okay, thank you for our revenue analyst. So now I would like to invite our cost analyst to explain the second approach, which is the bottom-up approach. So can you explain to us about the second approach?
Okay, now I will introduce myself first. My name is Haziq as a cost analyst. I will explain the bottom-up approach unlike the top-down approach. The bottom-up approach start by identifying all costs before estimating profitability. In the bottom-up approach, we need to account for 100,000 in material cost and 150,000 in labor. This gives us more detailed insight into our expenses. The first one we have revenue at 50,000, material cost at 100,000, labor cost 15,000, overhead cost 80,000, total cost at 230,000, net operating profit 310,000. This table present the calculation of operating cash flow (OCF) using bottom-up approach. The company record total revenue of RM 500,000 and incurred material cost of RM 100,000, resulting in gross profit of RM 400,000. After deducting operating cost expenses, including labor cost of RM 15,000 and overhead cost RM 80,000, and accounting for depreciation of RM 20,000, the company achieved the earning before interest and tax EBIT, which is RM 290,000. Since there are no interest, expenses, or tax in the example, earning after tax EAT remain RM 290,000. Finally, depreciation is added back because it's non-cash flow expenses, giving operating cash flow of RM 310,000. This indicates that the company operation generate RM 310,000 in cash during this period. That's all for my part. Thank you.
Okay, thank you for cost analyst, Mr. Ajit. So next, I would like to invite our tax advisor to explain the last of the approaches, which is the tax shield. So, Mr. Lokman, can you explain to us for the approaches?
Thank you. Without further ado, my name is Mohammad Hakim Jaya. I will explain the tax shield approach. So, for the start, the tax shield approach is used to estimate a project cash flow by considering the tax saving generated from the deductible expenses. A tax shield refers to the reduction in the tax that a company receives because certain expenses such as depreciation and interest can reduce from the taxable income. Next, we have the advantage. Advantage is how the company can reduce its debt burden and increase its cash flow. Even though depreciation is non-cash expenses, it still provides financial benefit through the tax saving. So we have the simple of the calculation for the tax shield approach. So the formula is a tax shield equal depreciation times tax rate. Example, we have the depreciation we have RM 20,000 and the tax rate is 30%, and we get we get 6,000 ringgit. So this means the company save RM 6,000 its tax because depreciation reduce taxable income. To understand this better, imagine that the company did not record depreciation. In the case, its taxable will be high and it will have to pay more tax. By the including the 20,000 ringgit depreciation expenses, the company reduced the taxable income and save RM 6,000 in the tax payment. Although depreciation does not involve an actual cash outflow, the tax saving is create a real as a result. The company has more cash available for the operation, expansion, or future investment. That's all for me. Thank you.
Okay, thank you, Mr. Luman, for your explanation about the tax shield approaches. So now we will continue our meeting with the discussion about how the company will execute our new product. So, how about the expected um, units whereby we can sell our product in terms of how much unit we can produce more?
In my opinion, for our expected sale of unit, we can estimate around 50,000 for make sure not everyone can buy our new product. So I think it's the best choice. It's the best estimate unit we can produce.
Okay. How about the selling price for this product? How much um, we can sell for one product for the what price?
So, in my opinion, I think the average price are 140 ringgit for the our product.
Maybe for the production capacity, how it is going for the production.
I think production capacity is the maximum output a company can produce with available resources. In a bottom-up approach, finance managers analyze production capacity to ensure the company can meet expected demand efficiently without increasing unnecessary costs.
Okay, so we will discuss about the approaches. So based on three approaches that we discussed just now, the comparison between three approaches, which is top-down approaches, bottom-up approaches, and also the tax shield approaches, we might be choose bottom-up approaches. It is because first one is top-down approach. Um, the starting is from the economy to industry and then moving to the company and then they can build their product. Therefore, if we use our approach, second approach, which is bottom-up approach, we will starting from the product, which is we already have a sample product, and then moving on to customers, and then giving the benefits to the company, where it is we can get the high revenue. So overall, we must discuss about the comparison between the three approaches, which is top down, bottom up and also the tax shield. So the three comparison is actually have a differences, which is from top-down approach. We might be have the starting point is from the economy, and then they give to the industry, and they give also to the company, and then they can make the product. So basically, it's actually they might be to offer to market opportunity, and then also they want to identify to enter the market for their product. So in bottom up approach, we will starting from the product where we already start from the product whereby the starting point of the product, and then we moving on to the give it to the customer, and then we will give the benefits to the company. So the benefits, which is we can get the profit from our product launch. So the last thing is a tax sheet approach, which is they are starting from the financing, and then they move to the tax, and also at the end they can get a company value. So basically, bottom up approach is actually for new product launch, and also the easy for the project get the profit, and they also have using the cost of control, sales forecast, cost production, and also the cash flow, rather than the top down and also tax shield. They want to reduce the excessive debt, and also they want to minimize our tax company, and then we can we can execute our launch. We can execute for our product to launch using the bottom up approaches. So I think that's the good approaches that we can use for our new product. So how about all the team finance to using if we use the bottom up approaches?
Mm, One of the major advantages of the bottom-up approach is that it provides a detailed breakdown of all costs. This allows managers to identify where money is being spent, control expenses more effectively, and also make a better budgeting decision.
Mm. So I think it's good to use bottom up approach, because it is actually specifically for product launch, or the company, if they want to produce new product or project, they will use the bottom up approach rather than the two another approach. So I think we will consider as we will consider this is a good, and also mm, it's better to using these approaches. So we can conclude that our new launch product, we will get a get a good financial. We can solve the problem using the approaches that we already considered just now. So I guess bottom up approach is good. So what about the finance team?
I think so. The bottom-up approach is the more suitable for our product.
So to conclude, we use bottom up approach, right?
Yes. So I think that's all for our meeting today for the finance team, And I guess we will see our production and also the product new launch at a grand launching for next month. So that's all for today. Thank you.